Hi guys, welcome back. Today we're going to be looking at Apple stock. So since about midway, more specifically September around last year, Apple stock has been trading sideways. It's down about 6% since then. However, compared to 2020 quarter one, the revenue is up 34% compared to just 6% growth in 2020 quarter one. They've also sold more than 40 million 5G iPhones in the last year, and they're comfortably beating out all their competitors as well. Today we're going to be looking at whether Apple stock is now a buy. If you do enjoy, consider subscribing. It is free and it does help me out a ton. If not, thanks for watching anyway. On to the video. So before we begin, just a little bit about Apple company. So the iPhone maker's 5G dominance has increased as its smartphone shipments had reached 57 million units in quarter one, out of which close to 40 million were 5G iPhones released last year, up more than 44% compared to 2020. It's worth noting that Apple's growth is significantly higher than the overall smartphone's year-over-year growth of 24%, so almost growing twice as fast as the rest of the market. This also helped the gap with the currently fastest growing smartphone company, which registered a 32% year-over-year increase. However, Apple's average selling price increased 13.3% to $841, which is higher than Samsung's as well. The advent of the 5G smartphones has lifted Apple's fortunes big time. It's driven an increase of shipments and has also increased the average selling price per iPhone. In the near term, this is unlikely to change as it is an upgrade window and a massive upgrade window for a lot of Apple customers who are currently stuck with an iPhone 7 or an iPhone 8. And because of their pricing, there's definitely going to be very positive in terms of their revenue and profit as well. The good news for Apple is that 5G smartphones are still early in terms of growth. They accounted for just under 40% of the total shipments in quarter one. However, the IDC estimates that 5G smartphones will occur to nearly 70% of overall shipments, or 1.53 billion units by 2025, which means that by then, Apple will be selling a good chunk out of that 1.53 billion, and more than 1 billion 5G smartphones will be sold in the next few years. In terms of the price, the stock is trading at a meager 27 times trailing earnings, which is well below last year's price to earnings ratio of 40. The price to sales ratio as well is 6.5, and if you look below, the 2020 average was 8.41. So that basically shows that Apple is growing really, really fast. Everyone knows how strong of a brand company it is, how strong of a brand name that it has, and the sales that it makes. However, it is trading almost just under the value stock range. So especially with the growth looking to increase in the next few years with the rise of 5G and Apple expanding internationally in terms of more specifically in South America and Asia, buying it now can be a very cheap valuations to buy an amazing company at a decent price. On top of this, the Mac revenue has also been increasing, especially with the M1 sales, because of Apple creating their own M1 chips. The profit margin and revenue has increased, and with this, it will increase the total margin for the company, both in the near term and the long term as well. So what's the future growth for Apple? So Apple Pay is one of its future growth mechanisms. It plans to expand geographically. It's recently launched in Mexico and South Africa, so they now have Apple Pay in 6 out of the 7 continents, one being Antarctica, and then slowly they'll try to spread across more and more countries in these continents as well. They've also created more and more groundbreaking chips, especially with the M1, which in terms of quality has surpassed Intel and Qualcomm, their two previous providers, in regard to performance over power consumption. On top of this, they've also been employing innovation in new areas, especially augmented reality, servers, and GPUs. So despite being just primarily an iPhone company, they are still continuing to innovate on the side and trying to better their company over there as well. They've set an all-time revenue record of $9.1 billion, which is up 70% compared to last year, more specifically in the geographic segment with all-time record revenues in Europe and Asia Pacific. And in March, they hit quarter records in America, China, and Japan. Because of the main growth factor for this all-time revenue record was a very positive customer response to the new M1 Max that they provided, and on top of this, once again, a very good growth opportunity for Apple into the future. The company in the near term or the last few years has been heavily reliant on China for its growth, but now it's going internationally, more specifically, as I mentioned, Asia, which includes China, but also South America. The M1 chip was also an amazing investment for Apple. For the best tech companies, M1 exemplifies the idea. It has an amazing chip design, and it has one of the best specs of any chips right now, especially in the Macs. The chip provider is also better than the Intel and AMD chips, but it also is cheaper to produce and has a better power consumption rate as well. The Mac revenue was up 70%, which proved that M1 was an amazing success for Apple, and it was a really good step for Apple to take in the right direction, especially with Intel and Qualcomm holding the company back in furthering its products. And with its ability to innovate out of its technological constraints, Apple is no longer reliant on Intel, which is something that will benefit the company in the long run. So the next thing we'll be looking at is just some sales. We can see the iPhone sales have hit an all-time high as it hit $166 million in the last 12 months. It is impressive, but as we can see, the figure has been cyclical. Although every year they release a new phone, anytime the phone takes a big jump, such as such as fingerprint ID, Face ID, 5G in this scenario, anytime there's a big jump, you can see it really shot up. The last time was about 2018, and the time before that about 2016. However, it is a very clear trend when Apple releases new phones. They are consistently over the 100 million mark. They have been for the last 6 years, and currently they're hitting new highs. So it's an undeniably strong trend line to show from here. The next thing I'm going to be looking at is their Mac revenue. Their expected Mac revenue projected over the last few years has been about $27 million trailing 12 months. However, with the recent really well customer acceptance with this new M1 Mac, this has been increased to 31.5 million by 2022. You can see the growth has accelerated, so that's very promising in terms of their Mac sales. In terms of their iPad sales, again, they had an amazing year compared to before. In the beginning of 2020, they were averaging about 20 million in the trailing 12 months. However, now they hit 30 million, so that's about a 50% increase. Although it's nowhere near the times of 2014, 2015. If you look at the last 4 to 5 years, this is an amazing increase in terms of iPad sales as well. Their wearables, and their home appliances, so this will be stuff such as watches, Siri, Home, like those kind of things. You can see that this has actually decreased. It was previously expected by 2022 to hit 63.5 million. However, this has been readjusted to 51 million. However, this has been counteracted by exponential increases in all the other segments. So overall, we can see that their revenue is expected to rise to 317 million by 2022, as expected the 286 million that it was before. So even though there was a deceleration in the watch and home appliances segment, the rest of them came through, and Apple is still overall on an uptrend in terms of that. All of this, we're going to be looking at the financials next. You can see the net income, amazing for Apple, exponential increase over the last 10 years. Currently, we're looking at a net income of close to $7 billion. Yeah, $7 billion. The earnings per share is also really good. You can see it's increasing healthily over the last few years, continuously being positive and no real drops. That's good. The dividends have been increasing. How their payout ratio has stayed pretty similar. So exactly, it's not really a dividend stock, but it is still an added plus. Top of this, their operating cash flow, cap spending, and free cash flow are amazing. You can see in terms of their free cash flow, they keep about 90% of their operating cash flow as free cash flow. That's a lot of money they can invest into research and development, new innovation, or acquiring new companies as well. Their net margin is 24%, which is very good, especially for a company that creates products that are sold rather than just providing a service. Its return on equity is amazing at 103%. This is one of the best return on equities I've seen on any company I've analyzed before. So an amazing use of shareholders' equity. And their interest coverage is also very healthy at 35 years. Means that they can pay off their debt over a long period of time. So that's not too worrying about Apple as well. So the last thing we're going to be doing is the technical analysis. So we can see Apple's share price has been pretty stagnant over the last few since September of last year. You can see the stock price went up from about $70. It went all the way up to 140, and then dipped back down, back to 140, dipped back down about 120, 135, and then dipped back down to currently at 124. You You can see the stock price is trading about the 50-day simple moving average and is getting closer to the 200-day simple moving average as well. So if you do believe in the long-term growth like I do, I would suggest investing. It is a very strong company. It has an amazing brand. It's looking to grow into the future. And overall, it is trading at an incredibly cheap price, looking at the stock price and the stock charts here. And on top of this, you have a PE ratio of just over 28 and a price to sales of just over 6. So especially for a company like Apple size, with its brand power, its economic moats, it would definitely be a good buy to buy as of right now. So if you do choose to invest, make sure to do your own due diligence, and thanks for watching. Bye.